Hello and welcome to Livewire's Fund in Focus. My name is Chris Conway. Today I'm sitting down with Pete Robinson, who is going to be talking to us about the Challenger IM Credit Income Fund. Pete, thanks for sitting down with Livewire today.
Thanks for having me.
We're here to talk about the Challenger IM Credit Income Fund. What is it? What does it invest in? And what does it do for investors?
Yeah, so the Challenger IM Credit Income Fund is a monthly liquid strategy with a 10% fund level gate. It invests in a mixture of public and private credit focused on areas where we feel the best investment opportunities are. So it gives us the breadth to be able to look across the market and find those opportunities, whether they're in asset-backed finance market, corporate direct lending or commercial real estate lending markets. So a really broad remit to look across the market to find those returns. It targets a cash plus 3% return after fees without taking any interest rate or currency risk. So by having that fund level gate, by only letting 10% of the money in the fund out every month, it allows investors access to their money on a monthly basis if they need it for their own reasons, but protects them from broader withdrawals from the sector, and then consequently allows us to go into those less traversed parts of the market to find those pockets of excess return that are available.
Yeah. Pete, the fund has a long track record. Tell me about some of the people behind it.
It takes an army. I like to say within private credit, it's a manufacturing business. So we've got over 40 people in our business going out and looking for the right people to lend to, making sure they're lending the money at the right price, doing all the due diligence on the loans, putting them together, negotiating terms and conditions, monitoring and all the like that goes with that. So it is really a labour intensive business. And even, for those transactions, for all the people we have within Challenger IM doing that work, we've got a multiple of people outside from the wider Challenger group supporting our business. So whether it's myself who gets to talk about it or the leadership team within Challenger IM, it does take a village to do all this work.
Yeah. Pete, one of the aims is to reduce market risk. Talk to me about how you go about doing that.
Yeah, so we like to call it the KISS principle, which is keep it short, stupid. So within private lending, one of the great aspects of it, I think, from a market risk perspective is that it is short dated. So we are lending people money for a shorter period of time. I like to think of ourselves as an alternative lender, and really we're providing an alternative to public bond markets or the bank market. Mm-hmm. But by virtue of that, we charge a higher interest rate. And so people don't want to pay us that interest rate for a long period of time. What we tend to find is our loans are repaid within about three years, and so the average credit duration or tenor of the fund is about 3 years. Mm-hmm. And that compares to corporate bond markets where issuance is typically 7 to 10 years, and so it's a lot longer market. And so what that means is when spreads widen, the drawdown for our funds from a capital perspective tends to be much lower because we don't have the same duration. It's not to say that there's no market risk. I think we fair value our portfolio. So when there is volatility in the markets, we do see our unit prices move up and down, which I think is appropriate for investors to see and to understand. But certainly that idea of the KISS principle and keeping it short helps really mitigate some of those drawdowns during times of volatility and gives us the dry powder to go out and invest.
Pete, the fund can invest across public and private credit. Why is that important, and what flexibility does it give you?
The reason it's important, there's a lot written about private credit at the moment, and certainly there are opportunities within private markets to drive excess return consistently over a long period of time. We firmly believe in that idea of an illiquidity premium, so that excess return you get from investing in private markets. But it's not there all the time, and I think that's a really important distinction. I talk about the 90-10 rule, and I like to remind people that 90% of the time, private markets are the best place to be. Gives you that illiquidity premium, gives you that excess return when markets are stable. But the best trades are during the 10% of time when markets are volatile and you go into public markets, because what you can do in public markets is buy something cheap. What tends to happen during periods of volatility in private markets is transaction activity slows to a halt. Mm-hmm. So you can't really monetize volatility in private markets, whereas you can within public markets. So COVID's a great example. The best trades we did within COVID were investment grade rated bonds that we bought at very discounted prices and sold them 6 to 12 months later at significant capital gains. Yeah.
Pete, talk to me about the objectives of the fund and how's performance been?
Yeah, look, we're really pleased with the performance that we've had since 2017 when we launched the fund. The aim of the fund is really to deliver that cash plus 3% return consistently through time with capital stability and high levels of income, and we've been able to do that. So 90+% of the returns comes from income generation. And so I like to say to investors, it's a really simple business that we're involved in here at Challenger IM. We find the right people to lend money to. We lend them money at the right interest rate and we get paid back. And so there's no special sauce here. I'm not trading the market actively and positioning for the next bout of volatility. We'll respond when that volatility emerges, but really what we're in the business of doing is lending people money at the right interest rate and getting paid back.
Yeah. What other features should investors be aware of?
Look, I think the liquidity features of the fund are unique and are differentiated, and people should understand that as part of the proposition. And so it does offer that idea of monthly redemptions with a 10% fund level gate. So that means that only 10% of the AUM can be redeemed from the fund in any given month. Now, in our view, for individual investors, that's a really powerful feature because it allows them to access their money for their own reasons if they need it for whatever personal purposes they need. But during those periods of volatility and stress, say in March of 2020 when there was this early release to super, investors were protected from that. The other thing I think that's important about this feature is it reminds investors that this is not a cash substitute. So you shouldn't be putting money into the fund with expecting to have access to it whenever you need it. It's not a cash substitute. It's there to drive incremental income and capital stability over the medium-term horizon.
Yeah. Pete, most importantly, where can investors find out more?
There's a lot of places. We're all over the place these days. So Challenger's website, challenger.com.au. We also have a website, challengerim.com.au, that investors can go to. I'm personally pretty active on LinkedIn, so you can see some of my thoughts there. And of course, it'd be remiss of me not to mention the Livewire website, where you guys have been really big supporters of our business and helped us establish our footprint in the market. So maybe the first place to go is Livewire.
Thanks for the plug. The check's in the mail. Thanks, Pete.
Thank you. Thanks for having me.
If you enjoyed that Fund in Focus, make sure to give it a like and don't forget to follow our YouTube channel. We're adding lots of great content every single week.